How we doing today, man? Weird mistake made today. That I don't know if I've ever made before. That ended up, affecting the day. Um, I blew both my accounts. I'm just kidding. I did not blow both my accounts. I accidentally locked my account out before the day started. I locked this account. First thing I do, I go in and lock this account because I'm not currently trading this. I only have one trade on it just to keep the account because you have to trade every 30 days on the express funded accounts. So I always come in and do that. First thing I do, I always come in, hit lockout feature. Cool, whatever, right? What did I do then on the other account? I put in my personal daily profit target now, which is something I talked about in the last video at 199. If you don't know why, I talked about it in the last video, but basically just to avoid worrying about $200 days and only focus on the process because I'm trading one micro, have my personal loss limit, blah, blah, blah. And I go in and I set my personal lockout feature every single day to where I can't change this because these personal daily loss limits are of no use if you can just go in here and change the risk, which is what I've done before. I didn't even know you could lock it out until someone commented that on my video. So now before every session, I go in and I lock this out so that I can't go in and if I lose $100, I can't go in and raise my daily loss limit to 300, 400, give myself more trades. I can't take any other trades. I can't lose anymore. This is a brilliant feature if you have a good risk parameter that you have in mind, so you literally cannot lose more than you want. What I do today, I went over here and clicked the personal lockout for some reason instead of doing it. It's normally right under here, so that was frustrating, or not even really frustrating. I didn't really care too much, but it was definitely like that's crazy, right? Because you go here and you do the lockout settings. It's right here. And for whatever reason, I saw this over here. You can't really see it because of my camera, but there's a personal lockout. And I just went over there and I don't really, I just didn't realize, right? That's all it is. It was just a simple mistake that I've never made before. I don't think. But honestly, it was kind of nice to just have a good day where I just watch price action, I watch price deliver, and I didn't have to have any expectation of pushing a button or anything like that. So you got to just watch price deliver live with no biases of this is where I want to take a trade, right? So going into the day, today was no news Monday, so it's not the worst day to not trade. But really, really clean on the higher time frame in my opinion. Let me go ahead and go to the NQ. And if we go over these charts here, pretty clear day in my opinion. Get starting the week on the daily, right? This is what I have marked out here. This is a daily fair value gap right here that I wanted to see get rebalanced to as a drawn liquidity put stability, right? The low and then consequent encroachment of it, and we're just running through. This is a really scary looking chart for any bulls. It's looking like this low is just imminent. At this point, it really doesn't look like we have anything going for us to the upside. This is pretty wild daily chart. Just displacement, fair value gap, displacement, right? We're about to get this inversion. If we inverse this fair value gap, then I will be bearish till this low, obviously. But yeah, that's where we're at on the daily. And there's some stuff I want to talk about specifically about why experience is so important with trading. And it's mainly just the last little bit, right? When has this started? February. Since February, and then even here, this was really like tricky, weird. Like this is not normal price action. Just opening gap, sell off on the beginning of the week, rally up, sell off, rally up. Right. This was weird times even since January. So this whole year has been pretty uncomfortable. Then ever since February 21st, we've just been selling off. Where if the joke is kind of like if you just sell off open the first setup, you'd be making money. And that is honestly kind of the case, and that's why, I guess I'll just talk about it right now. That is why I think that experience in trading is one of the most important things. I used to be in a Discord server with these kids that I met from somewhere a long time ago. I'm not still in the server. I don't even go on Discord currently, but these kids, they had this model or something, and I think they knew it wasn't like a real model, but it was called Wake Up and Buy, and it was literally as simple as it sounds. It was wake up, and then buy 9:30 opening bell, and it was ridiculously profitable for a time. Um, but that's why that stuff doesn't work, is because you have times like this where for weeks and weeks and weeks, you're going to just lose every single time that you push the buy. And they used to trade it or like back test it and stuff, and it was like marginally profitable. But that's where it's like, if you're a new trader and you started trading the last few months, you might be taking all types of these shorts really early off open, and it's just working and it's hitting and hitting and hitting. And eventually, they're not going to be working the same. And if you're not able to adapt to that, you're just going to have to learn the hard way like everybody else. That the first setup doesn't, right there. I know you guys know, if you guys have only traded NQES for the last year, 2 years, I know for a fact you guys remember the times where literally every single long was just printing. Like anytime we'd sweep a low, anytime we get a bullish SMT, anytime we get something like that, it was just printing. Like it was just printing longs. There's been times like that. This is one of the first times where you've just been printing shorts just constantly. But that's why market experience is something you can't fake, is because if you've only been trading for 6 months, 3 months, it's not that you can't be profitable or that you can't have good discipline or that you don't know the strategy or the confluences, but you quite literally just have not seen live time what it's like with live market, not back tested, but you've never been able to see just a strategy or a weekly sentiment just flip, where it's no longer just shorting every single time off open, or it's no longer just every single short works off open. Like it takes that time of realizing, seeing that it's so fleeting. Because when the kids were trading that wake up and buy, where it's just wake up, buy the market, it was working for a while. And then or if the first, it was basically the same as this first long setup, you slap along and it just would print anything. But eventually you have to adapt when the market's not doing that, and it's fine. Right now, the best thing you can do is be really observant about shorts really early off open. Why? Because they are working. You need to be able to adapt. It's not that you don't do something because, it's just going to be a phase. You should be taking advantage of the current market. It could flip tomorrow, it could flip the next day, it could flip next month. I don't know when it's going to flip, but you have to be able to recognize these trends, right? Trading is really just following trends at the end of the day, because we're in a bearish, we're bearish, right? We're bearish. What can you do about this? Nothing. You can't do anything about this. It doesn't matter what you think, what you feel. You're bearish right now. Why have all the setups, right? I'm literally just looking at this one. SMT here. I remember this. SMT here. Right? SMT above new week opening gap on a Monday, I think, or Tuesday. Displacement, there's a fair value gap, displacement again, boom, Asia low, and kept selling off, right? Next day, I don't remember where we were, 12 or 8, right here, 9 o'clock open, pushes up, 9:30, into the fair value gap, sell off, right? It's just, you have to adapt, you have to recognize, you have to see it, and you just have to do it, right? This is where we end up taking the loss, because we sold real quick off open, but we came up just to sell again, right? And you have to adapt quick and realize that, right? Right now, try and be on the right side of the market, because you're just trend chasing. You have to have the experience to know that eventually, like if your strategy, if it stops doing that, if it stops just selling off because, we have targets to the downside, if you go back in time on these charts, it does not matter. It used to not matter what type of liquidity you had built up, because you just wouldn't run it. You just would not run the liquidity, right? Let me pull up 4 hour. What do I mean by that, right? We used to have a lot of liquidity that we would just build up. And again, when you're in an uptrend, this is an uptrend on the 4 hour. Low, 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 low. These lows get swept, right? Just because you have to sweep something at some point. But this is the uptrend. No matter what, you're going up over the long period, right? This is where it gets a little bit more consolidated in the higher time frame. But when you're in these uptrends, you're looking for longs. You're like, it's so simple, but it's so overlooked and it's so overcomplicated. Just because it feels like it can't be that simple. So all that being said, what does that do? What does that mean for us? What does that mean in general? Well, it means that when we were trading today, we were bearish, right? We were bearish. We're bearish until proven otherwise, until every single day doesn't sell off. And then you have to adapt. When it stops doing that, when it stops working, you have to then adapt. You can't just keep, oh, it's been shorting every single day. Let's just short again. Eventually, you're going to lose and you have to reevaluate, right? But that's just part of it. What do we do? Why were we bearish? We had these lows. We opened the new week opening gap. We sold off. We had a healthy retracement above back here that put in a wick right here in the new week gap, and then we had displacement lower, pull back, equilibrium, displace again, run through this low, displacement through this low. We're holding a 30-minute gap right here, tiny one, and then we also had a 1 hour. We didn't have a 1 hour gap, but we had a 5-minute bearish gap holding right here. And importantly, on ES, we came up and made a 15-minute SMT right here, or 5-minute SMT. We just took out this high, 910. I'll just kind of show you guys that on ES. Right here, off open, 910 high. This is a 910 high right here. We clearly came above it. And that was enough for the market to sell off. Again, like I've been talking about, it's these market trends that are happening that you have to be aware of. And you have an SMT off open like this, it doesn't matter that we inverse this 5-minute bullish gap. It does not matter. This is not a trade. We don't take this. It's not a trade. It's not an inverse, a long inversion. We get an SMT. What else do we get here? When do we put in the SMT? That's important as well. We take out the high at 941. So no trade potential until after 941, minimum 941. We get no sort of confluences that were bearish yet on the lower time frame. We push up one more time. We take out 930 open, right? That's an important level as well, high of the New York session. We sweep that. And then we get a change in state delivery on the 1 minute right here, right there. We then get displacement lower right at 947. We get displacement lower. What do we have here? We have a candle with no wick. That's a nice point for the market to draw up to. Also a fair value gap, right? And we haven't taken out this low yet, right? We displaced down towards it off open, came up, swept liquidity, rebalanced, made an SMT, flipped structure, and then we pulled back to the fair value gap. We displaced again, creating this order block right here. Order block that lined up with the fair value gap right here. Obviously, we trade it, we hold it, right? Because at this point, we had an SMT with ES. We had ran this low already. So you would have missed this move if you were waiting for an inversion fair value gap, right? That's why today I wouldn't have even had a trade, even if we didn't lock our account. I wouldn't have had a trade. The order block's consequent encroachment of this fair value gap, which is pretty crazy to see. We then end up holding it, right, showing weakness to go above, closing a body, tap in, close the body below, tap in, close the body below, tap in, third time, close the body below, flip bearish, and then we sell off to this daily fair value gap and then continue to sell off to the equilibrium of the daily fair value gap. I do think we'll probably see some sort of legs up because it's just not sustainable. But this is the price delivery right here. This is the day. This is the day right here. This is all you would need, all the way to delivering to this daily fair value gap. That's all you would need to have a good day. Where was my entry today? It was nowhere. Could I have taken a trade? No. I was locked out of my account. Like I said, I've never made that mistake, but I wouldn't have had a clear and obvious trade for my exact model, which is why I want to start taking advantage of more so just the market structure and reading price, because it's one thing to read price, right? Like I was watching this live. Okay, we have an SMT. Okay, we have a 1 minute change of state delivery. And why do I not like the 30 second on a lot of days? Well, because, or maybe not the 30 second. 30 second was fine, right? This is the change of state on the 30 seconds. Well, the 15 second, right? Where does this get you in trouble? This gets you in trouble by by seeing that this is a change in state delivery on the 15 second. We don't sweep out any liquidity. We do have the SMT already at 941, but we change state delivery here, and it stop rage again. Why is this not valid? It's because it's a 15-second band, and the 1 minute. If you just wait for the 1 minute, that's all you need. You don't need the seconds time frame. There's certain times where it's good. I'm not saying that you just need to throw it away. Like I don't think that I think the 15-second and 30-second are very valid, right? Don't get me wrong. But sometimes I can get you in trouble by getting premature, change state delivery, stuff like that. I'm not getting rid of the inversion fair value gap, but I'm trying to evolve my trading to where my entry model isn't bound by a pattern, right? And what do I mean by that? Well, the draw on liquidity was lower today. Why? Because we're bearish. And I hate when this happens, but the draw on liquidity was this previous day low, March 7, or maybe that wasn't even previous day low. I think it was, yeah. Friday's low, we had all the structure we need to, right? We displaced towards it. We're not typically ever leaving lows like this and just reversing. But we don't know, right? Because we're coming back up. So what do? We wait. We have an SMT. Again, ES. SMT right here. Take out this high that we didn't on NQ, lower high. We get the change of state delivery on ES as well, right here. The candles that swept out liquidity right here and this high. We had a liquidity sweep here, came down, swept out this high again right here, change of state, or if you want to do change of state right here. Cool, whatever. We get the change of state delivery in ES as well. After taking out, making an SMT. Also, let's see, we don't pull to a 30-minute order block, doesn't really excite me too much. 15-minute fair value gap, right? In a key level. We had not traded into this yet. An unfilled fair value gap at this point, right? An unfilled 15-minute gap right here that is in confluence with our trade. So we have a higher time frame tap of a PD array, and we got to change state, get a fair value gap. This gets respected. We sell off here. We get displacement again. This order block then becomes a clear and obvious area that you want to see rejection. Why do I want to move away from inverse fair value gaps? Well, the first reason is that I think it limits you a lot to just pattern trading because, again, there's no clear and obvious inversion fair value gap here. Why do I trade them, though? Well, because it gives you a clear-cut entry model. Plain and simple, it gives you a nice entry model. But if you're sitting there waiting for inverse fair value gaps, instead of trading based on liquidity, I was sitting here, and again, I couldn't trade today, but I was sitting here looking to see if this fair value gap would get broken to go long, because it would be a sweep on the low, inversion, some liquidity, but it just isn't the right bias. It isn't the right direction. It isn't in flow with the market as well as it should be. Where are inversions really powerful? Well, down here. We just got a 5-minute inversion. I would like to see this now hold bullish and continue higher. That's in my opinion. They're used as confluences to kind of read the market sentiment. And again, I'm not saying that entering off inversions is bad or something I'm going to never do. Like, I still will use inversions a lot. But if you're waiting for an inverse fair value gap here on a day like this, your target for the day gets ran off open because you didn't get any inverse. And I guess if you want to like cherry pick and say, oh, well, you had an inversion. If you really want to be that guy and say that this is your inverse, be my guest. But I'm never going to sit here and say that that's an inversion fair value gap. Even though, I mean, it's kind of ridiculous that it does get respected somewhat. But what am I going to start doing? I'm going to start interchanging change in state delivery and inversion fair value gaps with context, right? Why? Because I just think it will give me a lot better opportunity to get in the market and not be as much pattern based and be more so price action based. What would I do if hypothetically from here to here was a fair value gap? Then I would just simply wait. If this was a fair value gap right here, I wouldn't give as much weight to this change in state delivery because there's a fair value gap that we could be trading down to keep going. But when we have no fair value gap here, when we get the SMT, change in state delivery, we did displacement, we pull back up here, you can very much expect this to hold, especially when you see this rejection here. I mean, I didn't take it. I didn't even do a paper, but I did throw a this thing right here on this because I recognized we had no wick here. So I did expect this to be a high probability fair value gap tap. And I did actually like just do this paper tool. Like it wasn't that I took the trade or anything, but it worked out really good. And that's the thing. I haven't built much confidence trading anything other than inversion fair value gap. So it's going to be a learning curve. Again, I'm not changing my strategy because my strategy has never been inverse fair value gaps. That's just been the entry model. But I think it limits me a lot to just pattern trading it. Whereas if I kind of use it interchangeably with just liquidity and where's the market heading and when, look at where 950 lines up right here. 950, boom, taps into this wick, this fair value gap, this change of state delivery, these order blocks, and then we sell off perfectly. As soon as we get that, we get a 98 point and more, right? Why is this fair value gap important? It's the only fair value gap in the leg that broke the lows, so we trade to it. We either want to see this get respected or disrespected. Order block, boom, we respect it. Cool. It's just like, it's so much simpler to just trade what the market's giving you than trying to wait for the pattern in a sense. And again, there's so many times where an inverse fair value gap is a great entry and valid, and I just don't want to limit myself to that and get to a point where I feel like, oh, if I'm not trading inverse fair value gap, I'm doing something wrong. Because quite literally, you don't need that. You don't even really need a model to trade. You just need to have intuition and understanding of something you've seen repeat. What have I seen repeat? SMTs, displacement, right? Drawing liquidity. That's all that we're doing in a sense. We're just building up. That's all the experiences. That's all anything is in trading. So I want to start using the experience I have and using my ability to read the market and start being able to actually just be more in a flow with the market, being more of a rhythm with what the market's doing, delivering, instead of just, I have to get inversion fair value gap after a liquidity sweep. Because, again, if you're just looking for a liquidity sweep and a fair value gap, like, you don't get a trade today. And not that you need a trade every single day, but this was very clear, and to not be able to capitalize it because your inversion fair value gap that doesn't actually matter, doesn't show up. Like, these fair value gaps and stuff like that, they're so irrelevant. They're so irrelevant. There is no master algo. I'm sorry to burst your bubble. I'm so sorry to burst your bubble. There's no master algo. There's no master algo. I promise you. It's just the market moving, reacting to different things, right? There's stuff that repeats because it's a market. It's going to be repetitive. That's where we make up all these things: order blocks, CISD, SMT, right? It's all just a way to interpret something. There's no master algo, so there's no need to give precedence to an entry, a fair value gap, an inversion, and act like that is the only way the market works. A fair value gap getting broken or not broken is not the only way that you can validate if something's going to go higher or lower. And I don't know. Again, I'm not saying I'm just abandoning them. I'm still going to trade them. I'm still going to trade them when they're clear and obvious. But I just want to also start being able to trade differently. But it's going to be hard. It's going to be a learning curve because I don't have the confidence to enter on them. Why do I have confidence on inverse fair value gaps? Because I've been entering directly off them for so long that when they're cleared, there's no hesitation. A lot of times, that's still going to be the best setup, right? That's still going to be the best setup a lot of the time. It's still going to be the best, most favorable entry. But again, on a day like today, you don't get it. So it's going to be a learning curve to get confidence enough to be able to enter off this change of state delivery or enter off this fair value gap tap. But at some point, I'm going to have to understand and start being able to evolve my trading to where I'm not bound by these things. What am I bound by? I'm bound by, SMTs. I'm bound by where's the liquidity. I'm bound by when's news. I'm bound by all these different things. And then I don't use the 1 minute because the 1 minute is holding all its power. I use the narrative, right? We're in a bearish model. We've already rebalanced above this high. We've been selling off. We have these lows here from last week. We have a 5-minute SMT. And then what do we want to see now? We have the 5-minute SMT. What do we want to see? We want to see something on the 1 minute that validates we're going there now because it's going to be quick. We get the change state delivery. We get a fair value gap. Boom. That's all you need. It's just context and that. So That's my little summary of the market today. I'm only really talking about this section right here because I think that's the only part that really mattered too much. I think everything after this is just whatever the market wants to do at this point, right? Look, again, this fair value gap, it's not going to hold because it doesn't need to hold. We're super bearish, right? We're super bearish. Um, so that's all my review on the market, honestly. Good day for me not to trade. I didn't really see what I needed to see. I don't think I would even personally taken this if I was able to trade. Because it's not, again, it's not really my model. But like I said, I want to start evolving my trading, not to where I'm just strategy hopping, and I'm not gonna just. But I don't think trading is just XYB checklist. I don't think it's liquidity sweep or you know what I mean. Like I don't think it's just so. I don't think it has to be so robotic. I don't think it has to be so just one size fits all, one strategy fits all. I think that it's just simple to just make it simpler, right? To trade simpler, to trade what the market's giving you rather than what you want the market to give you. Because a lot of times, if you're waiting for your entry model, you're basically telling the market, "Hey, it's only valid if you do what I want, what I think you are going to do, or what I want you to do." And again, I'm not saying that having an entry model is bad or trading one model. I'm not essentially changing the model I trade because even when I trade inverse fair value gaps, I'm still trading them with the same ideology that I would trade a change of state delivery, right? The same way that if we get an SMT there and we had a fair value gap right here, like I said, and we inverse, that's my setup. Boom, I get in. So again, I'm not abandoning that. I'm just trying to look for other ways to enter the marketplace using context and narrative. So let me know what you guys think, right? I'm always reading the common stuff, but I'm learning from my own experience. I'm learning from the stuff that makes sense to me. I'm not learning your guys' strategy. I'm not learning, from your exact mentor. I'm not saying I'm not learning and watching videos and stuff like that, but you guys have to understand that trading isn't one size fits all. It's not one strategy fits all. It's not your strategy is the best. It's not you do this, you're profitable. It's none of that stuff. I'm not learning your guys' strategy. I'm not. I'm not reading the market the exact same way you guys are. I might be using the same confluences and stuff like that, but I'm not looking at the market the same way you are. We're all doing things differently. So don't fall into the trap and the danger of going and finding people's stuff and telling them that they need to do this, that, the other, because I'm on my own journey. I'm learning my own things. I'm getting my own live experience. I'm learning different things in the market. Why? Because that's trading. Trading is your own journey. It's your own experience. Market experience is more important than any video you've ever watched. I can guarantee you that. I can guarantee you that market experience is more important and more valuable than any video you have ever or will ever watch. Because market experience is what you're actually learning, right? You watch a video on how to play soccer, basketball, football, you watch a tactical video. As soon as it becomes game time, everything you just learned about is going out the window. Maybe you remember one or two things, but you're not going to be able to perfect that. You're not going to be able to execute that. You're not going to be able to do anything, right? Let's just say in soccer, right? I just watch a video. It tells me that my position needs to do X, Y, Z. Let's say if I'm a winger, my position needs to get wide and create space, or I need to check away from the ball, right? To create space, like make a run forward and then run back real quick so I can create space for myself. Or I need to be checking my shoulder, right? So you can know what's behind you. You check both shoulders. Okay, cool. Or I need to be thinking 3 moves ahead, right? Or in any sport, right? But in soccer, just the one that I played. In soccer, one of the biggest things is just to know what's going to happen before it happens, right? Know where you want to play the ball before you get the ball. Know who's open, what you're trying to do, and it's always changing. You're always changing because you're running around a field. You have to have your mind going 24/7. Okay, if I get the ball right now, I'm going to pass it to him, or I'm going to take this guy on for a dribble, or I'm going to shoot, or I'm going to hit this ball first time, or I'm going to take a touch, then do this. But it's not even just one idea. It's if I get the ball here, I'm going to do this. But if that's not on, by the time I get the ball, I'm going to do this instead. So you have 2, 3, 4 options sometimes, and your brain's moving. If you're playing at a high level, your brain is thinking about 5, 10 different things. Every single one of the pros, they are playing at such a high level. And why is it that if you watch a video on tactics, you might hear the best information from the best coach, from the best player ever, and they tell you something, and you go into that game if you don't have the experience, right? If you're still trying to get better at just controlling the ball and dribbling and passing and shooting, you're never going to be able to use that good advice because you don't have enough experience. You don't have enough experience. Some people are more naturally gifted at sport than others. So they can hear an advice and they can get the fundamentals down and then they can start excelling quicker. But you're never going to be experienced. It's never going to happen. That's why watching videos on sports is never going to make you a better sports athlete or better sports player. It might make you more intelligent. It might give you a better way to train, but you are never going to be better at a sport by watching someone else talk about it, watching other people tell you tactics and stuff like that. It will never make you better. Trading is just like a sport. You can watch the best video with the best education, with the best psychology tips, but you are never going to be able to face that psychology by yourself. You're never going to be able to sit there and ask yourself, hey, when you're in a trade and you take a loss, that video is not going to help you, right? That strategy is not going to help you. Because if you can't recognize it, if you can't if you can't execute without emotions, you need more experience. You don't need another video. You don't need another strategy. You just need more experience and you need more confidence. That's why I need more confidence with just entering on change state deliveries, more confidence just and letting my bias play out, right? Because it needs to be, and it's like why Johnny and Justin, they call that their trading models the flow state model or I think they both call it the flow state model, I'm pretty sure. But it's because it's just you're just in tune with the market. It's not one size fits all. It's use confluences that we all use, SMT, fair value gap, inversions, change state delivery, liquidity. It's the same stuff. Just take those things and figure out how to win more than you lose. That's trading. It's not I wait for 9 or it's not that I wait for 9:30. I wait for London high to get taken and then I wait for a 5-minute fair value gap and then I wait for a 5-minute retrace into the fair value gap and then I wait for a displacement like out of it and then I wait for a 1-minute fair value gap and then I enter off the 1-minute fair value gap and then I trade and target Asia lows, right? That's not how trading works. It'll never work like that. And if you're trying to follow that type of framework that is that restricting, you won't succeed. What were we talking about in this trade here? We had liquidity, we had higher time frame narrative. So we had higher time frame narrative, which was bearish, because right now that's just the trends that the market's doing. We had an SMT. That's a confluence right there. Oh my gosh, SMT. We had SMT. We had change of state delivery. We had displacement. We had a fair value gap tap. Right? That's confluences. But it's not, right? It's not, we didn't have an inverse fair value gap. We don't have a NQ tapping to a higher time frame PD array on a fair value gap, But why is it still a valid trade? Because it has all the right looks of something that tells you we're going to go now. It's not, it's not this thing of, if you're always waiting for certain things, you're just never going to see what you need. And again, today is a day where if I didn't trade this, that's perfectly fine. But I can read the market and you can still read the market and it's still going to make sense to you. Because regardless of this was your entry model or not, I'm not saying that you need to just start entering off things just because it looks like it's going to do something. I'm not saying I'm going to start doing that. I'm just saying that regardless of what I wanted to enter off of, today objectively, you have to read the market the right way, which is SMT, okay? Bearish number 1. Cool. I don't have any idea yet. Okay. Change of state delivery. We don't have a change of state delivery before this. No change of state on the 1 minute. We get an SMT. We still have an SMT. We get a change of state delivery. It just so happens that if you just entered just because of that change of state delivery, you would have made money. But what else do we get? We get displacement. We pull up to a fair value gap. Even if you want to see us keep going higher today for whatever reason, there's no reason for us to go higher. You literally can't deny the fact that this fair value gap held. This fair value gap held bearish, closed bearish, came in, closed, dumped. We have an order block. What does the market do? Sells off through the slow. Okay, even though I wanted to see this for a potential mock entry because I couldn't trade, we didn't get it. We did not get the inversion. We did not get a change state delivery back up. We held bearish and we continued to go lower, right? It's so painfully simple yet so easily overcomplicated because, again, all that trading is, all that this was today was just reading price. If you read price today, it was bearish. There was nothing bullish. So you couldn't lose on a day like this, because where were you going to go long? Where were you going to go long here? You couldn't. And that's why it's like you can't just long when you sweep a low, because it just doesn't work like that. So it kind of shows you that if you just do the right thing, right, and if you just pay attention, you literally can't lose. What else was this? A 5-minute order block that we pulled back into, right? So when we pulled into this order block here, 5-minute order block, fair value gap, order block, boom. It's just, and I'm more so just telling myself all this because it's just so simple, and I overcomplicate everything. I rush different things. I take trash things. I pattern trade different things, and I just need to keep it simple and understand that it's just not that difficult to do. But experience is going to be my teacher, and yeah, that's all I got for you guys on a Monday. I'll see you guys tomorrow. I hope we have a great day tomorrow. Some good Champions League games to watch. If not, but yeah, I really want to attack this week and do well. The 1 micro again, like I said. And again, man, my main entry model is going to be inverse fair value gaps because it's such a good entry model. But I am not going to limit myself. I'm going to start taking change of state delivery trades with context, and we'll see how we get on. So let me go what you guys thought about today. Hopefully you guys had a good day, and subscribe if you haven't, man. Comment. It really does help push the channel, and it helps me make some ad revenue, man. Makes me make a little bit of money. So I appreciate that. So I will see you guys in the next one. Appreciate you guys all supporting and killing it recently on the channel. So I'll see you guys tomorrow.